Thanks for tuning in to another edition of Why Real Estate. Today we are going to discuss mortgage interest rates and what exactly affects them. What makes them where we're at about approximately 6 3/4 today, at this time. Well, one thing that you can follow is, and to know if interest rates on mortgages are going to go up and down, isn't necessarily, although it affects it, what the Fed does with the rate, okay? But watch the 10-year Treasury note yield rate, okay? They often mirror each other, even though they don't directly affect each other. Often it's conflated that they go up and down in tandem, when in reality, the truth is they're competing for the same investors. So those investors that are investing into the government on a Treasury note, like a 10-year note, are the same people that are also balancing, okay, do I want to buy mortgage-backed securities? And mortgage-backed securities are typically more risky than the Treasury yield, investing back into the government, whereas the government will pay you a fixed rate every 6 months, not on compound interest, and say it's at 3%. Currently today, let's talk with today's number, it's about 4.25%. They'll pay you that annualized every 6 months, okay? And then you get your original investment back, safe investment. Well, with mortgage-backed securities, those typically are about, right now, they're about 2.25% to 2.5% higher, as you can see, with the rates that I announced are close to 6 3/4 in that area, or 6.5, just in that range, whereas the Treasury yield rate is at 4.25%. So the things that affect your mortgage interest rate are overall economic factors, okay, including supply and demand for properties, including overall cost of raw materials, right? Major economic factors, the cost of energy, all of that comes in to affecting mortgage rates. Also affecting them are the financial markets as a whole, inflation, and of course the Feds when they raise or lower rates. So anyways, if you want to see the most accurate way to predict, pay attention what mortgage interest rates are, pay attention to the 10-year Treasury note yield rate, okay? And I know that's a lot to swallow as far as looking at just simply buying a home, but it's key to know and understand a little bit more so that you're in a more of an empowered position when negotiating and purchasing a property, okay? So, reach out if you have any more questions regarding this topic, but that's largely what's going to happen going forward. Many people are anticipating mortgage interest rates dropping in 2025. The counter to that is that economically, a lot of the indicators that determine that are strong right now, okay? Unemployment's down, wages are up. We all know the cost of living went up tremendously during COVID in the last 4 years. Which obviously affects all of us. However, because of the stability of the economy currently, we may not see huge drops in mortgage interest rates. It'll be a lot more gradual, throughout the next year. So anyways, there's a little bit of information for you. Reach out with any questions.